The most popular catchphrase in commercial real estate over the last few years has been "stay alive till 25," with investors predicting that rates would come down by then and transaction activity would have started to pick back up. And now, with 2025 just a few months away and rate cuts having already started, it's looking like we could see a lot of positive changes in the industry starting as early as next year. And this is really good news for people that are looking to break into commercial real estate right now. And in this video, I want to walk through 3 specific areas of the business that I see the most opportunity heading into the new year, and why each of these things might be worth considering if you're just getting started in commercial real estate. So the first big opportunity I see heading into the new year is a very small but very quickly growing niche asset class, and this is the data center market. Increases in the use of things like AI applications and cloud-based storage have led to tenant demand for this product type growing significantly over the last few years, with data processing and management needs growing significantly faster than developers can build new product. According to JLL, the US co-location data center market has doubled in size over the last 4 years, with absorption in the first half of 2024 increasing almost 9 times what it was in the first half of 2020. Occupancy levels in this asset class have also increased at a 30% compound annual growth rate over the last 4 years, and vacancy rates across the US have dropped from almost 10% 4 years ago to just 3% today. And as a result of this supply and demand imbalance, data center asking rents have also seen huge upticks in what was already impressive rent growth over the last 4 years, with year-over-year increases for some data center users coming in as high as 37% in the first half of 2024. And from an analyst perspective, working on data center transactions will also expose you to long-term 5 to 15-year commercial leases with standard operating expense reimbursement structures and scheduled base rent escalations, giving you a really valuable skill set that would also be transferable to other product types in the industry if you decided to make a move. And on top of that, with the unique needs of data center tenants related to things like security, power requirements, and uptime guarantees, this is also a sector where you can really specialize and become an expert very early on in your career, which can help you take on leadership positions more quickly than you may have otherwise been able to if you were working in more crowded sectors of the industry like industrial or multifamily. With the huge rise in popularity of AI we're seeing right now, the data center market could be in a similar position to where industrial warehouses were when e-commerce really started to take off. And if you're looking for a place where you can become a specialist, advance your career quickly, and maximize your exit opportunities into other product types if you want to shift gears, starting out in the data center market could be a really interesting path to consider. Now, the next big opportunity I see in commercial real estate today is directly related to changes in interest rates, and this is working on the debt side of the business, ideally within a third-party intermediary. With the start of the rate cutting cycle already behind us, buyers and sellers are starting to gain a lot more certainty heading into the new year, which will very likely lead to an uptick in both investment sales activity and refinances. A lot of investors have also been kicking the can down the road by extending existing loans over the last 12 to 24 months, but if rates come down to a point where it makes sense for an investor to refinance, there's still about $570 billion of loans that are scheduled to mature in 2025, which should result in a huge amount of deal flow throughout the capital markets. And with a lot of firms that offer mortgage brokerage services having been very slow to hire or even laying off employees over the last few years altogether, this means that analysts are going to be in very high demand as soon as transaction activity starts to increase, meaning that job openings in this part of the industry could be significantly higher this time next year. And when you do ultimately land a job, when you're working in brokerage, even at the analyst level, a lot of your pay could be based on the production levels of your team, meaning that if you're up for the increased workload that inevitably comes along with high deal flow, you could end up making a lot more money than your peers are making very early on in your career. These types of jobs are also really good for young professionals because you tend to work with a lot of different borrowers, allowing you to build relationships with investment and development firms that you might want to work for in the future, and you'll also be exposed to a lot of different product types, which can help you narrow down your focus later on in your career. Now, the last big opportunity I see if you're looking to break into the real estate industry in 2025 is something that I would have not said even just a year ago, and this is working in the office sector. The office sector still has a ton of issues right now, and remote work is still posing a huge threat to the industry as a whole, but real estate is an extremely cyclical business over time, and there now appears to be signs that the office market may have already bottomed out. In Q2 of 2024, according to CBRE, net absorption of office product in the US came in at a positive 2.4 million square feet, which was the first quarter of positive net absorption since Q3 of 2022. Office leasing activity also increased by over 13% quarter over quarter, and sublease availability dropped down to 4.2% from 4.7% in Q2 of 2023. A recent survey of over 1,300 CEOs conducted by KPMG also found that 83% of CEOs in the report expected a full return to the office within the next 3 years, which is up from just 64% in 2023, and 87% of respondents said that they were likely to reward employees who do come into the office with favorable assignments, promotions, or even pay raises. We're also seeing major companies like Disney, JP Morgan, Starbucks, and Google moving to more strict in-office policies over the last few years, and late last month, Amazon announced it will require employees to be physically present in the office a full 5 days per week starting in January. And even if it continues to take time for office demand to fully recover, aside from pockets of the multifamily sector, office is really the only place right now where we're seeing a material amount of distress, which is leading to buying opportunities in this part of the industry that just aren't available in any other product type. This means that investment firms that have raised capital to buy distressed assets are finally starting to see opportunities to deploy that capital at scale into office product, trading at huge discounts to replacement cost, even in prime locations. And as a result of this, we should see a big uptick in hiring among major private equity firms to execute these transactions. Especially in a competitive hiring market, with office being arguably the least popular product type for new entrants into the business right now, if you're looking for a place to stand out in the job search, office could be a great place to do that. And if you have any interest in building a career in this asset class long term, now could be one of the best times in history to make that happen. So I hope these things are helpful as you're thinking about next steps and where you might want to focus in 2025. And if you want to make sure you have the skills you'll need to make it through the interview process at real estate investment, development, and brokerage firms as these opportunities come up, make sure to check out our all-in-one membership training platform, Breaking the CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, and you'll also get access to the Breaking the CRE Analyst Certification exam, which covers topics like real estate pro forma and development modeling, commercial real estate lease modeling, equity waterfall modeling, and many other real estate financial analysis concepts that will help you prove to employers that you have what it takes to tackle the responsibilities of an analyst or associate at a top real estate firm. And if you like this video and want to see more content on the channel like this, make sure to hit the like button and let me know in the comments where you see the biggest opportunities in commercial real estate heading into 2025. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.